Hi there, Serial Trader here. Let's have a look at the major U.S. indices as of today's close, and also as of the close of this holiday trading week. So, alright, we've now gone past the point to stop worrying about this possible triangle. As soon as we broke above this level, this 2746.09, that took care of that. So now, likely we have our wave 2 in place here, and I would suspect we have a 1 up, 2 down, 3 in progress of small degree. So let's just illustrate that here. Something like this, and okay, have to be I think this will suffice. Something like that, perhaps. And so we still appear to need a little higher in this small wave 3. And judging by closing with such strength today, I would suspect Monday will also be a fairly bullish day. That tends to happen when you have a good run going into the weekend. It usually has a little follow through the next Monday at least, sometimes more. So certainly looking higher here short term, and also big picture looking higher as well. So things definitely cleared up, and I'll show you what I mean by that. So now fairly confidently bullish here. I'll just get to the NASDAQ wave chart before we go to the Thinkorswim charts. And okay, so working a potential ABC down in the bullish case, and then we had to have a 1-2, 1-2, and we had to break out the channel. Well, we broke out the channel quite nicely. And let me just get rid of these fib retracements. They're not really applicable anymore. And we broke out the channel, and so far we've gone to the 1.618 relationship for this 1-2. So that's certainly a common wave 3 target. But if you look at this, it looks like the subdivisions just aren't there. So this 3 still needs a 4 or 5 to complete the bigger 3. So we still need something like this. If we have this little 3 of 3 done or almost done, we'll need our 4, need a 5, and then I'll complete this bigger 3, and then we'll need a bigger 4, and then this 5, right? So new all-time highs look to be in the cards fairly soon for the NASDAQ composite. And probably once it breaks out, it'll make significant new all-time highs. But we'll just watch the wave development as it progresses. So we'll just okay, I think we're done looking at the wave charts for now. Certainly a lot more clarity since yesterday as we got our bullish breakout. So we'll go to the Thinkorswim candlestick charts. And okay, so SPX 3 T line very healthily crossing above the T line, and we're closing well above both of them. Also closing above this 20-day simple moving average. So it looks quite bullish. Really looks like it's in full breakout mode here. And I would expect significant follow through, and the next most important level to take out, obviously other than this high here, would be our resistance level at 2801.90. But I'd say quite likely we do that. And well, before I switch over to the other indices, I just want to show you a weekly chart of SPX. So we haven't looked at this for a while. Now, what do you see? Well, hopefully you see a bullish engulfing candlestick as of this week, and a close well above the T line and 3 T line. So this is a classic candlestick buy signal, and a close above the T line and on the weekly time frame, which makes it more powerful, more significant. So this implies the next 3 to 5 weeks will be in this direction. So that certainly spells a pretty optimistic picture for July and even into August there, possibly more. But this shows you the bias to what your trade should have at the moment. If you're trying to short things or go against the trend, make sure the patterns on whatever you're doing that on are extremely clear, because with the S&P 500 turning this bullish, that's going to lift a lot of, the rising tide lifts all boats, not all of them, but just keep that in mind if you're looking at a trade as a short candidate. Be aware that you're going against the grain here as far as the broader market at the moment. So I just thought I'd point that out because, it's not every week you get a engulfing pattern on SPX. So that's very nice. We'll go back to the daily, and I think we're done for now on this one. Well, I guess I'll just touch on what I did, trading-wise. So still, I didn't do any big positions yet, but just playing with the futures. And I think I was just trading for S&P mini contracts, the Septembers. And, $1,600 on the day wasn't too bad. Basically just, if I go to a 10-minute price chart, I think I had it open here. Just an example of what I would do. I would just basically use the T line for these short-term trades. So obviously I identified that the larger trend on this 10-minute chart was certainly up, not just on the 10-minute chart, but that's what I was looking at. So every time we'd have a pullback to the T line, okay, and then we'd start reversing upwards. Well, you could enter the trade and then put your stop just below where that pullback to the T line went, and then ideally just ride it up and keep adjusting your stop every time it pulls back until it finally pulls back enough and stops you out. So oftentimes you'll find a setup where you're maybe risking four S&P points and the upside is 10 or more points. That's a pretty good risk reward ratio. Almost 3 to 1, sometimes more than 3 to 1, depending on the little setup you get. And then at a certain point in the day, it just stopped going up and it didn't really go down either, just started going sideways. And heading into a weekend, it's like, all right, well, I'll close all my positions and just get back into something next week. No need to carry a futures position over the weekend since you can't manage the risk on that. I mean, something ridiculous could happen, and then Sunday we open up and gap down or gap up. In this case, would be good if you were long the contracts. But you lose control over the weekend. Whereas overnight during the week, you don't lose control because the futures are still trading all night. So that's all I've been doing. No huge positions yet, long-term positions, but definitely getting an appetite for them. Just waiting for a good setup, and I'll figure out what I'm going to do with that. Maybe update it on a future video once I do. But so yeah, that's all I've been doing. Just very nimble intraday trades. Definitely liking the futures. Lots of control there. Very liquid. Very reliable for using stops, and when the S&P is having a trending move, quite easy to capture a good piece of it with good leverage too. Alright, so enough about all that. We'll go with the Dow Jones Industrial Average. So the Dow definitely confirming along with the S&P. It broke at least this initial, actually two of these upper shadows it's broken above now. This third one is still there, but it'll likely get taken out as everything rises together. And it looks like we're closing well above the T-line, and the 3T line is crossing above the T-line. So that looks quite healthy there. The Dow was the most beaten up, so it may not have as strong of a upward move, but it'll certainly tag along, I would think, with the other indices. Now on the weekly, since we looked at the weekly in SPX, the Dow, I guess I'll mention, the Dow basically found support on its 50-week simple moving average. So that's quite healthy, really, when you look at it from this perspective. And if you go in here, we didn't actually have a bullish engulfing. We didn't close quite high enough to do that. So not the same actual buy signal that the S&P had. And also, we're still below the T-line and the 3T line on the weekly for the Dow for now. Okay, so the Dow is definitely a laggard at the moment on that weekly chart. All right, we'll go over to the NASDAQ composite. And very strong day up for the NASDAQ. In fact, it looked like it had the strongest day. and 3 T line healthily crossing over the T line, and obviously we're closing well above both of those, and closing well above the 20-day simple moving average. And we've we've filled that gap as well. So that's also just more confirmation of bullish expectations here. And the weekly on the NASDAQ, wouldn't you know it, had a bullish engulfing candlestick. Close above the T line and the 3 T line. So NASDAQ looking very bullish here. And we're not very far away from all-time highs on this index since it's been the strongest. So this implies the next 3 to 5 weeks will be to the upside on the NASDAQ. So very bullish implications indeed. And I just thought it would be good to point out a weekly pattern that's not all too often occurring. So we'll see if next week confirms and continues on as bullish. And right now I'd say the odds are pretty good that that will be the case. Okay, so that's probably good for the NASDAQ here. And we'll go the VIX. So VIX, yeah, died right off, which just complements the returning strength of the indices here. So you can expect VIX to just basically go back to sleep as the broader market continues rising. Any little spike up you see likely won't break any significant resistance levels that we've been failing to break, leading up to this point. So basically, the summary is bullish. Bullish is the way to be at the moment, until proven otherwise. All right. Well, I guess I'll just mention this whole week volumes have been low on everything, including just the broader market. So, little caveat: maybe it's not quite as trustworthy of a up move as it would normally be on decent volume, but I think we'll get some more clarity on that next week. There should be some more volume next week, as a lot of people just took this whole week off, being that it was a broken up week in the first place. All right, well, we'll check in again next week. Have a good weekend, everyone. Serial Trader signing off.